Good morning, everyone, and welcome to The Pulse, live from the World Economic Forum here in Davos. Now, the U.S. president, we know, is on his way to Switzerland right now. He's due to give a highly anticipated special address this afternoon. Now, we'll have special coverage of that speech. We'll also be hearing from the UN Secretary General, as well as chief executives from NVIDIA, Accenture, and NASDAQ. Also coming up on the program today, we're joined by Philipp Hildebrand, vice chair of BlackRock, the chief executive of Commerzbank, and the Bank of Israel governor. But first thing is first, let's check on the markets. Now, U.S. stock futures seem to be staging a pretty tentative recovery, I would say, after the S&P 500's biggest drop yesterday in 3 months. Traders, of course, waiting on President Trump's address at Davos for signs that tensions may cool over Greenland, or whether that's hopeful thinking and whether they actually go up a notch. Now, sentiment received a further boost after a sharp rebound, and also some of the long-dated Japanese bonds seem to be offering a lift to global markets. The mood, however, is cautious on the markets. It's also cautious here in Davos. So President Trump due to address the World Economic Forum this afternoon. The exact timing is in flux after Air Force One was forced to return to Washington because of an electrical issue. Now, the president is now on his way. His speech will be closely watched for further comments on Greenland. Speaking before his departure, President Trump also said he did not think that Europe would follow through on threats not to approve a trade deal with the U.S.
I doubt it. Look, they need that agreement very badly with us. They really do. They fought very hard to get it. So I doubt that. But we'll see what happens. We have a lot of meetings scheduled on Greenland.
Well, President Trump's threats of 10% tariffs on countries opposed to his Greenland ambitions was described as a strategy to weaken and subordinate Europe by the French president. The transatlantic rift has also dominated conversations, of course, with European leaders.
The proposed additional tariffs are a mistake, especially between long-standing allies. The European Union and the United States have agreed to a trade deal last July. And in politics, as in business, a deal is a deal. And when friends shake hands, it must mean something.
Canada strongly opposes tariffs over Greenland and calls for focused talks to achieve our shared objectives of security and prosperity in the Arctic.
Europe has very strong tools now, and we have to use them when we are not respected and when the rules of the game are not respected, by the way. The anti-coercion mechanism is a powerful instrument, and we should not hesitate to deploy it in today's tough environment.
All of our focus is on de-escalation, not in worst-case scenarios. The strategic relationship between the US and the UK, the military and strategic partnership between our countries is more important than the partnership between any two countries in the world.
With us now, Philipp Hildebrand, the vice chair of BlackRock. Philipp, as always, thank you so much for joining us. What a week. I feel like all of the tensions, the shocks, the geopolitical wrangling is distilled here in Davos. How worried are you about the ripple effects this could have on the world economy?
You know, when I've been having many conversations with clients and political leaders, and what you see is there's a great kind of urging both clients and political leaders to say, we need an honest discussion about the real security issues around the Arctic, Greenland, and with some specificity to identify what the critical security issues are, and so that you can enter into a dialogue that leads to solutions ultimately within the context of NATO. I think that's in many ways, the litmus test here. And so people are worried. The consequences, I think, both geopolitically and economically, are significant depending on the outcome that we'll end up seeing in the months to come.
But is there any doubt in your mind that tariffs are being weaponized? And if that's the case, it's very difficult to model, actually.
It is hard to model. Economies are good at adjusting. One of the things I've learned as a central banker is you always underestimate the degree to which companies will adjust to changing realities. And there's no question that the world has changed. This is probably, I was thinking about this morning, probably the most challenging moment in U.S.-European relations since World War II, or certainly one of the most challenging moments. And markets will see what the new equilibrium is. I think it's pretty clear, again, when you speak to our clients and leaders, that there's a general consensus that the old order that has shaped the world for the last 60 years is no more. And so the question is, what new equilibrium will we move towards? And there are many different outcomes that one can imagine, and depending on where we end up ultimately, we could have very different outcomes in the economy and in markets.
So how do you look at this new world order? And I know you say there are different, way of looking at it, but what does it mean for the deployment of capital and financial markets and where they need to be positioned? If we're seeing blocks that are based on geopolitical thinking or alignment on the political front, then it is going to be a very different world, but it'll also be different in terms of financial markets.
Yes, I think much will depend on the ability of Europe to essentially take advantage of the very large economy it is. If you look at the European economy, it's vast, right? The question is, can it come together? Can it enhance competitiveness? Can it address the issues that Mario Draghi identified so clearly in his report? This is no longer about diagnostics. We know what the issues are. Can Europe rise under pressure to come up with the right answers to be one of the important blocks going forward? That would be, the most likely scenario, I would say, still today, that under pressure Europe finds these answers and then is able to be one of the important geopolitical blocks going forward. You could have very different scenarios where you have much more fragmentation, which again would be quite a different world from a financial market perspective. But I would say the most likely scenario at this point is that Europe rises to this occasion. That's certainly what our European clients, European policymakers are striving for, or hoping for. And then you end up with Europe being a player. And then, as you saw, Prime Minister Carney yesterday talking about the middle powers. So you can kind of see a world order, but we don't know where this ends up. I think we are in a period between geopolitical orders, basically, and that's always a period of uncertainty, some volatility, and questions as to where we ultimately land.
Philipp, are we too tough on Europe? Because I hear, especially around, the Davos corridors, a lot of European leaders saying, look, we have 3,000 years of history. We kind of know what we're doing. People actually want to live in Europe compared to other parts in the U.S. So actually, the U.S. economy is doing so well because of threats. So people move manufacturing. I mean, surely we don't want Europe to do the same.
I think Europe has tremendous potential. There's no question about that in my mind. I'm perhaps somewhat biased. But when I say potential, we have enormous potential in addressing things that are relatively easy to address. Again, Prime Minister Carney, in a very noted speech yesterday, was describing how he has eliminated interprovincial barriers, trade barriers. That alone in Europe, again, this has been identified by Mario Draghi and others, has enormous competitiveness potential. So these issues are, some of them are hard to tackle. Deregulating is very difficult in the European context. The European apparatus is slow by design and not always the most efficient one. But other things can be done quite easily. So I think there's a reservoir of measures that would dramatically enhance Europe's competitiveness. So I agree that there is tremendous potential and we shouldn't be too pessimistic going forward.
How are clients behaving? Are they changing some of their behavior? I don't know whether they want less exposure maybe to U.S. assets. Is there a de-dollarization theme going on?
I would say if you look at the period since the great financial crisis, the U.S. has done incredibly well. This reflects itself in the fact that today 60-70% of the capital markets is U.S.-based. So most global portfolios came into last year being, structurally long the dollar. So you did see some adjustment, but I think that probably would have happened anyhow to some extent, given the degree to which most portfolios were long. And now the market, by and large, when I speak to clients, what I see is a sort of uncertainty, concerns, and worries, and you essentially wait and see what this new world order will look like that we're moving towards. This is, my guess is we will look back in 20 years at 2025, 26 as one of those pivotal years in the post-war period where things change. What we don't know yet exactly is where it ends up. And hopefully all this, the one echo I get from clients and leaders, frankly, is that whatever issues we have, we must try to solve them in the spirit of a dialogue, focusing on specific issues. What are the specific issues that are leading to this tension, and then try to address them?
And we haven't even touched on AI, but do you worry about central bank independence in the U.S. and what that could do to the markets?
Well, central bank independence and, more importantly, the achievement of central banks, namely price stability, has been an underpinning of the post-war economic order, or certainly not the entire post-war, but the last couple of decades. So there is value in this, undoubtedly. But what we're seeing at the same time today, we have many other structural forces that are really coming in. You know, you mentioned AI. When you look at the AI, broadly defined, has led to something like 40% of GDP in the U.S. in the last year. So there's tremendous potential in these investments around AI, data centers, infrastructure, energy, that could really enhance the growth potential. And ultimately, this will be the most important thing. We need to find ways to enhance growth. Given the debt levels that most countries are in, and the vulnerabilities of many countries in terms of their fiscal situation, we saw signs of this even yesterday in Japan. It is essential that we find ways to enhance growth. The investment spending that we're seeing, tremendous investment spending around technology, infrastructure, energy, has the potential of raising potential growth. If that happens, many of the problems that we're facing will be solvable.
I did a big panel actually yesterday on how to get growth, and I had Mark Benioff on it, I had Ruth Porat and others, and I think one of the conclusions was that you need inclusive growth, because you can have good growth and great numbers, but if half the people are left behind, then that's going to be problematic.
That is clearly, and that's, as you see, has been one of the themes that Larry Fink has really, I think, brought into this year's discussion. We need to find ways to do this, and AI, of course, is critical, because how do these technological innovations, how do they spread into the economy? Who benefits? Which companies, by the way, benefits? Also a very big macroeconomic question, a big asset allocation question, and then ultimately, how do you spread it into the workforce, into the population? I think that will be, from a kind of human perspective, and you heard some of the leaders now talking about this more and more. Ken Rogoff talked about it, but also some of the CEOs of the hyperscalers. You know, this will be one of the critical issues. How do we make sure that these benefits kind of spread through the population? I mean,
are companies, do you see companies changing fundamentally when CEOs talk to you about AI?
I think what I see is new. Obviously, we had a big hype around this last year, but what I find is new and encouraging this year. For the first time, you're beginning to see some of these questions being addressed. What does it mean for our children? What does it mean for the future workforce? How do you make sure that you have a population that supports the system? And of course, some of this is happening in the context of the populism that we're seeing rising in many countries. So there is I find a promising new focus by the tech leaders themselves on some of these secondary issues, in a sense of how it will impact humanity ultimately.
I mean, away from how it impacts humanity, how do you think it impacts financial markets? Are we in a bubble?
Well, it has had a huge impact on growth. First of all, as I mentioned, depending how you look at this, close to half of GDP growth has been related to, broadly speaking, AI. It has huge potential in raising growth. And if it does that, then the market pricing that you see will be justified. We will be able to deal with the high debt levels. We will be able to have growth that is not particularly inflationary. If some of these expectations are not fulfilled, we'll be in a very different world of stickier inflation, of lower growth, bigger debt problems, presumably more significant political issues. So it's a very important issue on how this potential, this ability and principle of these investments to enhance productivity, push up potential growth, I think is in a sense the critical macroeconomic question, and which will have huge repercussions on financial markets.
Philipp, thank you so much for joining us. Philipp Hildebrand there, the Vice Chair of BlackRock. Now, coming up, feisty Scott Bessent describes Denmark as irrelevant. More on those comments by the U.S. Treasury Secretary next, and this is Bloomberg.
This week, live from the Alpine Mountains of Switzerland, is the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate responsible AI deployment, economic expansion, and geopolitical tensions. Tune in for daily coverage all week. Context changes everything.
Denmark's investment in U.S. Treasury bonds, like Denmark itself, is irrelevant. That it's less than $100 million. They've been selling treasuries for years. I'm not concerned at all.
There you go. The U.S. Treasury Secretary Scott Bessent brushing off the prospect of Denmark selling off its American bonds. Now, meanwhile, Jameson Greer, the U.S. trade representative, told Anne-Marie Hordern that territorial issues, such as Greenland, are not part of the EU trade agreement, while acknowledging that European concerns about possible tariffs.
It's not a term of the trade agreement, and this is what I keep trying to say: is we should compartmentalize these things.
But for the Europeans, it'll be an additional tariff.
Potentially, that's right. Yeah.
So for them, it is part of the trade agreement.
Yeah, and I understand how they feel about that. I mean, one thing to keep in mind is that the trade agreement with the Europeans did not purport to solve every problem, and it didn't solve every problem. It solved a lot of problems, and it put us on a good path. But there are a lot of things it just didn't cover, even trade things, right? There are things about pharmaceutical pricing or digital that aren't quite covered there, and it certainly doesn't include, geographical or territorial issues.
Do you see this administration using tariffs to gain new territory?
I mean, the president has been really clear, and the United States has always, been aware of territory that's important for it geopolitically. You've seen the president talk about the Panama Canal. Obviously, we're talking about Greenland. Interestingly enough, one of the last times the United States acquired territory was getting the U.S. Virgin Islands from Denmark in last century. So there's a long history of countries acquiring territory through purchase or other means.
That was the U.S. Trade Representative Jameson Greer speaking to Anne-Marie Hordern, who's with me now. Anne-Marie, what a week. We're expecting the president. He's a little bit delayed. A little bit delayed. I mean, I hear, he's going to be in the Congress Center. We're expecting him still at 2:30. Loads of people are going to line up an hour before. Do we know what he's here to say?
So he's probably going to be about 3 hours delayed because Air Force One had to turn around. That's according to the Treasury Secretary. I think when the president frames his speech today, and as of last night, I heard it was still being worked on, I would think of it as a two-pronged approach. He has to talk to the domestic audience in America, especially when it comes to affordability. Since the start of the year, they've been teasing out all these ideas they might do, because November 3rd, the midterm elections, that is his North Star this year. So you're going to hear him talk about how to get on the housing ladder, maybe going after some institutional investors that are here in the audience who actually buy up housing in the United States, even though it's less than 2% of the market. He's probably also going to talk about things like the defense sector, that they have dividends and buybacks. He doesn't want to see that. Credit card interest rate caps is going to be another big issue for this president when he talks to bank CEOs. And then he's going to pivot and probably talk along the lines that he doesn't think individuals at the World Economic Forum, which people in the White House have said to me, this is the center for the global elite, have met the moment for everyday citizens around the world, including the United States. And he's probably going to talk about national security. And then the elephant in the room that has been part of every conversation here has been Greenland.
Yeah, what will he say on Greenland? I mean, again, Greenland is a little bit of a surprise, because if you look at national security, I don't know whether, a lot of Europeans think this is a personal obsession, that he wants it because he wants to win, but it doesn't make a massive difference to Arctic security.
So he started talking about Greenland in 2019, his first term. He really does care about the routes in from China and Russia in the Arctic. A lot of pushback comes from even Republicans in Washington will be, well, we already have a military base there. Let's just expand our presence there. Let's do a deal with the Europeans, which is why for some people, they're calling this a huge distraction. I know a lot of Europeans are calling it an existential threat. The take I get from a lot of individuals is that in the United States, they feel like it is a national security concern. I would say potentially the president.
But Denmark is actually ready, I think, to negotiate, right?
Yeah, well, all these European countries are. I feel like if you look back to how the president operated April 2nd when it came to Liberation Day, the question was always, are these new rules of engagement, or are you doing this for better negotiating tactics? And the president said, these are the rules of the road, until the bond market and the stock market started pushing back, and then it became a negotiation. We saw him take that tact as well with NATO. First term, reports all the time, the United States is going to drop out of NATO. Never dropping out of NATO, but the president achieved what he wanted to, was that the Europeans started paying more on collective defense. So if you think of it in that realm, this is just Trump negotiating live in the moment. And he is coming here where everyone is talking about him and everyone is talking about potentially some sort of off-ramp when it comes to Greenland.
Do we know the CEOs that he's meeting? There's apparently a reception, maybe later. It could be canceled because he's delayed.
He'll be delayed. I'm sure he will be meeting with all of them. I imagine is going to be a number of business executives. There's one individual that I do track closely that travels with the president, and that's Jensen Huang. Everywhere I've gone with the president, whether or not it was Riyadh, he did it as well in Tokyo. Jensen Huang is there in the audience, and he constantly says, my friend. He's like the new diplomat. First term, it was Steve Jobs, Tim Cook. Now it's Jensen Huang, and I imagine NVIDIA will play a huge part because they are really playing this huge role when it comes to national security with China and whether or not chips are allowed to go through.
Anne-Marie, thank you so much. Bloomberg surveillance co-anchor Anne-Marie Hordern, and Anne-Marie will also be speaking with the U.S. Special Envoy Steve Witkoff a little bit later this morning. Now, the UK Chancellor has called for cool heads ahead of President Trump's arrival in Davos. Here's some of my conversation with Rachel Reeves at Bloomberg House yesterday.
All of our focus is on de-escalation, not in worst-case scenarios. We have worked incredibly closely with President Trump the last year because we believe it's in our UK national interest to do so. The strategic relationship between the US and the UK, the military and strategic partnership between our countries is more important than the partnership between any two countries in the world. And it's very important for the safety and security of the Western world that continues, and we're determined that it will do so. Similarly, the fact that we were able last year to secure the economic partnership deal with the US, and we continue work on the transatlantic markets work that we're doing at the moment to make it easier for our capital markets to be better integrated, and firms listed in the UK and the US raising finance in each other's jurisdictions, great collaboration when it comes to digital assets. All of that is in the UK's national interest, and we'll continue to pursue our national interest vigorously. But I don't think it's in anyone's interest to escalate tensions or to allow rhetoric to be a substitute for hard work and diplomacy.
But you think the trade deal stands? Because at the moment there's wild speculation about whether everything needs negotiating, whether President Trump goes really hard. I mean, how do you model this?
I would just urge people to keep cool heads.
Cool. Okay.
I mean, that's what we did all through last year, and it actually served us pretty well. And whilst trade barriers are going up around the world at the moment, we can all see that. In the last year, barriers to trade with the UK have fallen. We've secured a comprehensive trade deal with India, which will come into force in the next few months. Just taking legislation through both of our parliaments to secure that. That includes trade in services, support for exports, and also around government procurement. That's a huge deal. The deal with Greer, one of the fastest growing economies as well in the G20, is very important for the UK. But most important probably is the trade with our nearest neighbours and trading partners in the EU, which was damaged after leaving the EU, voting to leave the EU in 2016. We are now fixing that mess by improving trade relations and cooperation with our closest allies and neighbours.
The UK Chancellor there, Rachel Reeves, speaking to me at Bloomberg House here in Davos yesterday. Now, we also have the NATO Secretary General Mark Rutte speaking on a panel here in Davos. Given all of the focus on security, let's listen in.
2022, and Donald Trump tried to convince our European partners that we have to solidify, and his voice is very important because of the financial, because of the strategic, geopolitical point of view. I, of course, hope that it will be solved thanks to all partners on the diplomatic way, and I'm rather...
How far are you willing to go to have good transatlantic relations? Does that mean giving the Americans Greenland, selling the Americans Greenland? How far should European allies go if the Americans do move?
Okay, that is, of course, the panel on defense going on right now. Coming up, we'll be joined by the chief executive of Commerzbank to discuss developments here in Davos and how the bank has remained independent despite continued takeover attempts by UniCredit. That's next, and this is Bloomberg. back to the Pulse, everyone, live from Davos. Now, talk of a new world order under the Trump presidency has led Germany to ramp up its defense and infrastructure spending. It's something that Commerzbank has more time to focus on after managing to fend off a takeover attempt by Italian bank UniCredit, one of the biggest M&A stories of last year. Now, with us now, Bettina Orlopp, the chief executive of Commerzbank. Bettina, thank you for joining us. Look, let's start with the President of the United States coming here. It's all anyone's talking about. I know there are going to be long queues to hear from him, and this is about reshaping a new world order. What does that mean for banks servicing clients in Europe?
Well, first of all, I think we need to be very diligent. So a good risk management needs to be in place because we really have to have a diversified portfolio. But we also have to have the profitability to support our clients because we all know that there's lots of ideas for investments, and it's also the necessity for investments, and the banks are there to be at the side of their clients.
But I mean, there's also, again, because of Greenland partly, an idea or people saying, well, let's just diversify away from U.S. assets, that we could see a de-dollarization or a slow asset decline of maybe clients interested in playing that game. Do you see any rumors or clients saying, look, this is something that I'd like to look into?
I mean, clients are clearly cautious. That's for sure. And we always also have seen after Liberation Day a dip, but then also a recovery, because we should not forget US is a very attractive, very large market, and there are a lot of very strong ties between Germany, between Europe and the US. So therefore, yeah, you see that people are cautious, but they are also thinking about how can we make it work. So how can we localize business more, and how can we reduce dependencies.
So you don't see clients saying, like, I mean, he's obviously not calling you up, but calling the bankers up and saying, sell all treasuries I own.
No, we don't see that.
We were talking also about the fact that there has been really a sea change in Germany because of the defense spending, infrastructure spending. They were expecting to have an impact on GDP either later this year into 2027. What does that mean for Commerzbank?
Well, I mean, our latest assumption now is something around 0.9% for 2026. That at least is a little bit of growth. It's not great, but it's a good starting point. And it's also that, I mean, this year is really the year where the whole investment program starts and will be continued then in the years to come. And we will see more of impact if we see also reforms unfolding, and therefore there is a big ask not only have the reforms we have seen so far, but speed up and do even more.
Yeah. I mean, because German policymakers are so busy with not only infrastructure, pension reform, defense, and everything else, are banking topics a little bit off the table? Do you feel like maybe that's being forgotten a bit?
Well, we do not feel forgotten. We feel in the center of all discussions because it's very clear, and it's also very clear for the politician, that, at least my opinion, that we are part of the solution and we are not part of the problem. That has already been the case during COVID, and it's also now the case. So we're really front and center of the debates, which is rightfully so, because we can really support, we can leverage, and that's our task. And luckily also we have improved our profitability so much that we also have the power to do so.
What do you make of the latest efforts by the ECB to simplify regulation?
It's a great effort. I have to say we would like to see more. I know the word is not very popular, but deregulation is also necessary. We see that there's no level playing field, not when it comes to the US banks, but also when it comes to some non-bank players. And therefore, we really ask to review at least some of the initiatives and make sure that we really have the power and also the flexibility and also the speed to move forward and to be competitive.
Does it help you already, or what would be your number one wish list for regulators?
Well, it helps. We see that there is that there are really some initiatives ongoing when it comes to the SREP process and stuff like that. But clearly, I mean, one of the key debates is Basel. We all know that, and we would wish for some support here. Another topic which is about to also impact us quite a lot is how we deal with AI. I mean, there is a governance necessary, clearly, but we really need to make sure that we really make the best out of AI and that we also need the support of the regulator.
Bettina, overall, I mean, big banks like JP Morgan are actually expecting the benefits from AI to outweigh some of the costs.
Yeah.
Do you agree with that? And can you point to specific projects that Commerzbank is doing right now?
Yeah, it's a very important theme for us. It will be the key priority for 2026, actually. Not only by starting digitizing even more our clients, but also digitizing our staff, have our staff become more familiar with AI. We have some very, very, very good use cases already in place. We use AI in pricing. We use AI to avoid negative revenues because of avoiding fraud. But we also use it for cost efficiency, like in KYC, to have really cost avoidance in place.
Where do you see in the future actually it most impacting your business?
Well, actually, it will impact everything. I don't see any area. I mean, the support functions anyhow are touched by it because banks are data-driven. We also are very complex because of the regulation, and this is the ideal components to apply AI.
Do you need less bankers because of it? How do you look at your hiring over the next 4 to 5 years?
I think in the moment we see rather that we see a change in what profiles we need. So that is more the point and more the discussion. And the rest we'll see, because we don't see it yet that you really have big replacement of big processes. And in our case, for example, when I talk about KYC, it was more the question, do we need to hire more people for KYC because the changed regulation when it comes to review cycles and stuff like that. So what we do now is that we can stick with the people we have. So it's more cost avoidance so far.
Bettina, overall, I mean, how much do you worry about valuations actually in AI bursting and it impacting some maybe the larger banks, but then filtering through to some of the European banks as well?
I think it's more a positive impact. I see really AI as an opportunity to even accelerate profitability improvements and things like that, and not as a threat.
So it was clear that 2025 was dominated in the banking space in Europe by a possible takeover of Commerzbank. Have you had a conversation of late with the UniCredit CEO, Andrea Rochelle?
I mean, UniCredit is an investor, and it's a large investor. It's actually our largest investor and largest shareholder. So clearly, we have a constant dialogue as we have with all our larger investors, and that comes with the quarterly calls.
Is there anything that they could offer to actually make their offer overall more palatable?
Well, there is no proposal out there, has never been. So we really focus on our, and very successfully, on our own standalone strategy. And I think UniCredit shares the opinion that current valuation levels do not suggest that there's a value accretive deal really possible.
Bettina Orlopp, thank you so much for joining us. That was, of course, the Chief Executive of Commerzbank. Now, let's also take you live to a conversation taking place right now. Bloomberg's Rumana Bersetchi speaking with the Qatari finance minister here in Davos.
Far East Asia, India, Pakistan, now, Europeans, they've been talking to us because to diversify their source of LNG, especially after the Russia-Ukraine war. So some of that is going to Germany, is going to France, and we have signed deals, with the countries, and we see more potential with the Europeans, although we have some issues, I think I must say, especially when, with the regulations, sometimes, there was, the Corporate Social Responsibility Directive, CSDDD, I think we have mentioned it in many occasions that, this could affect, our contracts with Europe. However, we understand that Europe now is really taking an easy stand in that one, and that should resume our talks,
Needs must, I suppose. I watched His Excellency, your Prime Minister, with his fireside chats yesterday, World Economic Forum President Hildebrand. And one thing he said about the economy, I actually took note of the line. He said, energy is our strength and power, diversification is key, and technology will power the future, which I think probably gives us an idea of the three prongs that approach the economy from your ministry, from the government. So energy obviously is going to be a key pillar for growth going forwards. Why the focus on diversification as well if you have this massive boon coming through?
Yes. No, diversification is very critical for the GDP because we don't want to be over-reliant, in energy, going forward. We know that LNG is the transit energy, and it's going to be there for some times. However, if we are to build a sustainable economy, we should not be dependent on a single sector. So definitely, growing the other sectors, creating jobs, creating businesses in Qatar, and then having contributions from other sectors and the diversification, and not to be over dependent on a single sector is very critical. We are talking more about sustainability, future generation, and that's why really I may speak from a Ministry of Finance perspective. For example, we have built a medium-term fiscal policy framework for the country. This is something we have developed over 4 years, and we have seen the impact. And what happens? We take different view in the economy for the next 20 years, and it can go beyond. Different scenarios. We look optimistic scenarios, pessimistic scenarios, worst-case scenarios, from a revenue perspective, from oil prices, from even from economic sectors perspective, and then based on that we forecast our spend and our budget while investing in the economy, but in the same time being disciplined, and efficient in other issues of the spend. So we have this view, and then we decide on the surplus. If there is a surplus, we know exactly what's going to happen to that surplus. How much of it goes to Qatar investment authorities for the future generation, to create an intergeneration equity? How much of that goes to central bank to enhance the reserve of central bank and to build resilience, in our monetary policies? How much of that it goes to settle debt? And to say about debt, Qatar debt, went down from 58% in 2021 to 41%, and as a result, we got a double A. We get upgraded to a double A, where we are the highest rated country in the region, and better than among even many more developed economies. And also, some of that money on the surplus goes, we call it for a stability fund. That's under the control of Ministry of Finance. Basically, so when we have a bad year, we don't have to go and borrow, just to support the budget. So, and we are being very disciplined in the following this fiscal policy framework. So very important, as I say, this complete the pictures with the economic diversification. His Excellency the PM was mentioning.
The Qatari finance minister is there speaking to Bloomberg's Jubana Bersachi. Now let's return to the storm of controversy around President Trump and Davos with Chad Thomas, Bloomberg's executive editor for Europe. Chad, look, there's excitement, right? Everyone I know is going to try and get into the Congress Hall to see that speech, much anticipated speech by President Trump. We know he's late. How's late, and does it actually impact the public speaking engagements?
Yeah, so that seat is the place to get into today in Davos, and basically for the whole week, let's be honest. He's running a couple of hours late in terms of his landing in Zurich because of the fact that there was problems with his plane when he left from D.C. But there was some buffer built into his schedule for the early afternoon, so we're not sure yet exactly when that speech is going to happen, but everyone is obviously anticipating, and I suspect that line is going to start forming sometime pretty soon. The speech itself, as planned, is supposed to be very much on U.S. domestic issues around housing affordability and topics like this. However, as we both know, he doesn't always follow the script, so we'll have to wait and see. And whether he takes questions from anybody in the audience, that will also be what we'll be watching for to see if he then starts talking about Greenland and some of these other topics that have been so big this week here in Davos.
I mean, do we know who he's meeting? So there's many chief executives. Are there receptions? There's something potentially tomorrow also on Gaza and Ukraine, maybe?
Yeah, so he's having a reception this evening and dinner with executives. He himself said that he's going to have many meetings. That's what he said on Greenland. We don't know exactly with whom he's sitting down with for Greenland, other than we do know he's going to meet with the German Chancellor, because the Chancellery has said that meeting is taking place. I actually think that today could go off a little bit more harmonious than most people think, and that's because of the people he's likely to be talking to. The German Chancellor has been one of the people who's been trying to turn down the temperature We know that Meloni is here. She's someone who has put herself forward as a negotiator on this. And the people who've already left, Macron has already left, von der Leyen has already left. Those are the two people he's been in a spat with most recently. And the Danes are not here, and President Zelensky is not here. So it could be more harmonious than many might have thought.
Chad, so interesting. Thank you so much. Chad Thomas, Bloomberg's executive editor for Europe. Now, coming up, the Bank of Israel surprised markets with a rate cut earlier this month. We'll get more on the path ahead and the wider uncertainty coming from the White House with the governor next. This is Bloomberg. Welcome back to the Pulse, everyone. This is, of course, our show live from Davos. Earlier this month, the Israeli central bank surprised markets with an unexpected rate cut, citing lower inflation due to the ceasefire in Gaza and a strong shekel. Let's get more on the path ahead with Bloomberg surveillance co-anchor Lisa Branovitz. Hi, Lisa.
Hi, Francine. Thank you so much. And I am here with the governor of the Bank of Israel, Amir Yaron, here in Davos, Switzerland, where he is not wearing a jacket, which is rather shocking to me. So if he starts shaking, you understand why. Governor Yaron, I want to just start with your impression so far of this Davos. I know you've come for many years. How is this one different?
Well, first of all, naturally, everyone is waiting to see what President Trump will say today. In general, geopolitics are immense. Europe, energy, Middle East. So there's a lot of developments that are very important and are more than just the normal economics than we often are focused on.
And I'll ask you extensively about your opinion on Greenland and your outpost there. No, I will not do that, but I will ask you about rate cuts. And you have cut rates twice since November. It was the first rate cut in about 2 years. There was a better outlook for the Israeli economy. Is this the beginning of a path of gradual lowering of rates as the economy does continue to strengthen and as the shekel also strengthens?
So, Lisa, first of all, I want to say the Israeli people and the Israeli economy have shown great resiliency given the 2 years of war and the horrific day of the 7th of October. We are seeing people buying credit cards. VC money is back and is at high numbers. The shekel has strengthened. We are seeing the CDS of Israel government has come down back to pre-war level. And that's basically all demonstrating that we are in a better geopolitical situation than we were. But since the ceasefire, we've seen three major developments that have led us to the rate cuts, and in particular, the last rate cut. One, we've seen inflation environment moderated, not just realized inflation, but also expected inflation. Second, we've seen the shekel continue to strengthen, which provides a tailwind for more inflation moderation. And third, very important, I've talked to you in the past about the balance between demand and supply shortages of workers in Israel. We've seen that being moderated since the ceasefire. Reservists are coming back. We are seeing more participation in the labor force, and we're seeing some moderation in wage pressure. All these together have tipped the balance into the last rate cut. And in terms of your questions, we're continue to do it based on what we've said all along, the developments in inflation and economic activity and in geopolitical uncertainty. Going to try to do it in as gradual as the developments happen. And we're seeing an interest rate a year out at about 3.5 because we think we are not very far from neutral. So that's our assessment as of now, with a growth rate for next year at 5%. This is assuming the ceasefire continues.
Does the Board of Peace, as proposed by President Trump and adopted by the United Nations Council, help foster that security that the ceasefire would potentially remain?
So, I'm going to speak from an economic perspective. I hope that the mechanism that this brings about, and it got a lot of members that have stakes in this issue, bring about some of the constraints that are related to this. If Israel needs, first and foremost, continued security that will facilitate ceasefire. Hopefully, it also brings about the mechanism to enhance rehabilitation in Gaza, hopefully bringing prosperity and security there. If those two things happen, then obviously the Israeli economy will continue to do well. Gaza will improve. And I think it will also unlock levers for farther regional arrangements. And if those happen, I think we will see much bigger growth, not just for Israel, but for the region at large.
And this really goes to a key question, which is that Israel has lost some clout in the international sphere. And you've seen this with the Gaza war really becoming a political hot potato in a lot of different places. What do you think it'll take to get the reputation back to a place where travel can come back, where business can keep flooding in and really maintain the economy?
So you're right. One cannot deny that we've seen sentiment being negative in some circles. Having said that, we've observed, as I mentioned, improvements in high-tech investments, in Israel's risk premia, obviously purchases of our defense, equipment. So all that is good. But I think to the extent that sustainable ceasefire and furthermore, basically sustainable regional arrangements are developed, I believe that negative sentiment will dissipate over time.
You are the central banker to Israel. You have an increasingly international presence as well. You talk at a lot of conferences. You're very involved in research around the world. How focused are you on what's happening with Federal Reserve Chair Jerome Powell and some of the questions around the intellectual freedom around the Federal Reserve, the political independence of the Federal Reserve? How closely are you watching things like the hearing today with Lisa Cook and beyond?
I won't get into the detail of the Feds. Even, of course, I hold Chairman Powell and the Fed with very high respect. I want to say you've heard me in the past speaking about the importance of maintaining the strength and independence of institution. I've said it in the context when the judicial changes in Israel started in 2023. And obviously, central banking is an important institution, and central bank independence is kind of the pillar to facilitate its operation towards price stability, which ultimately facilitate growth and prosperity of the economy. So I think these elements are very, very important. And I think all central banks look at the developments in a way that we want to see central bank independence continue, because we believe that's a pillar for delivering price stability, which we think ultimately, even though sometimes there are short-run trade-offs perhaps, that's ultimately the right way to deliver prosperity to the economy.
Do you think that the independence is more in question today of some of these institutions than they have been in the past?
I think obviously we're seeing a lot of things in the news in not just in the U.S., but I think ultimately it'll come down to us central banks delivering the goods of maintaining price stability, even when the environment is, let's say, more challenging.
In general, do you leave this meeting more optimistic or more pessimistic?
I think there's a lot of uncertainty about various developments, but I think there's also a lot of avenues for hope for better outcomes economically, not just for Israel, but around the world in many ways.
Governor Yaron, thank you so much for being with us. That is Governor Amir Yaron of the Bank of Israel. And I will send it back to you, Francine.
Thank you.
Lisa, thank you so much. Bloomberg Surveillance co-anchor Lisa Abramovitz. Now, on tomorrow's show, we'll be joined by the French Trade Minister and, of course, the chief executives of Accenture, Marsh and Darktrace. Still to come today, an interview with Steve Witkoff, the U.S. Special Envoy, at 10:30 a.m. London time. And, of course, we'll have full coverage of President Trump's special address to Davos from 1:30 p.m. London time. So it's going to be a busy day. You'll have all of the highlights from Davos throughout the next couple of hours. Up next, Bloomberg Brief, and this is Bloomberg.